What up, folks? Happy Wednesday. Welcome to another edition of the Finance Rebel Show. I am Kamari Ellis, and y'all know every Wednesday we go live answering your money questions right here, right now. So today we're going to hop right into it. I'm definitely going to be talking about Elon Musk, his new tax bill. If you haven't seen that, he just sold a bunch of stock. Now, in typical Elon fashion, there was always some kind of PT Barnum moment in the mix. So we're going to talk about that, talk a little bit about inflation. As always, if you have any money questions, taxes, stocks, insurance, business, go ahead and throw them in the chat and we will get at it. Now, let me do this one thing real quick because I didn't share out anything. Before I got going. And I saw Elon. I saw that he sold $1 billion earlier. But then another article came out that showed that Elon is such a slick, conniving person. I guess that's why him and Kanye like each other so much. But they're always playing the media, and I get it. Media attention sells. Where the eyeballs flow, the money goes. So I get it. But I guess I'm still old school, right? I guess I still believe in being honest. I guess I still believe in telling the truth, being forthright. Now I'll joke around and have a little bit of fun with you guys, but my truthfulness, what do they call it? Truthiness, probably might hurt me a little bit because I believe in telling the truth in all shapes, sizes, and fashion. I blame my dad, right? My dad says, son, if you tell a lie, you're going to have to remember that lie, and then you're going to have to tell another lie to cover up that lie. So I never liked telling lies because I figured I was too lazy to tell them because I knew I wasn't going to remember any of the stuff. So, like, what's the point? What is the point? Now, again, like I said, we're going to talk a little bit about Elon. I want to talk about this new tax bill, right? Now, I saw the new article come up, and I'll bring it up in a minute. We'll go over it real quick, but it talked about his sale, $1 billion sale, but there's stock options, employee stock options. And I was literally working on a client tax return who had employee stock options. So I said, wow, well, isn't this a coincidence? So we'll talk about that because out of this, he's going to have a hefty bill. He's going to have a hefty bill out of this sale. Now, give me 1 second. Because I ain't shared none of this, y'all. I just went live. But remember, every Wednesday we do this. So go ahead and throw your questions in the chat. That is the main reason why we are here. But give me one moment. And I will share this out to a couple spots real quick. And again, while we are waiting, go ahead and throw your questions in the chat. Give me 1 second, y'all. All right, so yeah, let me do something real quick. So me and Courtney were having a conversation before we went live. And also Jose's here in the chat as well. So Jose, we were talking about Ford. Y'all know I've been talking about Ford for quite some time. Ford's doing its thing. Jose was talking about he got beat up a little bit in the market trading. We get it. But I was talking about how I popped on some Ford Leaps. And so I was talking about my Ford haters out there. And Courtney reminded me that she was a Ford hater. She was hating on me, y'all. I got haters. I guess I made it. Mama, I made it, I guess. Not really, but I guess. But anyway, she was telling me that she was hating on the Ford. And I was like, why? I didn't get it. I didn't understand why, but she said she didn't like it. But Courtney never finished that point. She didn't tell me why she didn't like it. But nonetheless, I was saying that I got lucky on Ford. right? Because I wasn't expecting Ford to blow for maybe a decade. So when I'm buying, I'm a lot of times when I'm showing y'all what I'm buying for a long-term hold, 10 years or more. I'm not trying to do a whole bunch of trading in and out, not trying to be sexy, not trying to be fancy. I'm trying to get my positions in hold. Why? Because history and data shows the more time you have your money in the market, the more profits you will make. Okay. I'm not looking at jumping in and out. I've already tested that theory years ago on somebody else's dime when I was a professional investor. I could just say, hey, this company might do good tomorrow, might do good next week. But I know for certain that over a 2 to 10 year span, that this company is probably going to work out pretty good. I would rather put my money on where I have the strongest probabilities to win. So if I know I have the strongest probabilities to win long term, that's where I need to hedge my money. So that's what I'm about. That's what I like doing. So I don't know. But listen, I know everybody wants to get quick, rich, and fast. It usually doesn't work. Now, I know we are in a very, very peculiar time right now because the market has not fallen significantly in the last 12 years. We've been in probably the longest bull run. I think it is the longest bull run the stock market has ever seen. So, with that said, everybody looks great right now because the market's rising. So, everyone looks great. So, you got a lot of people out here selling courses and saying they're this and they're that, but they're doing it in the bull market. Holler at me when things get a little treacherous. That's when the rubber meets the road. That's when you'll know the ladies from the women and the men from the boys. So we'll get to see all that. We will get to see all that. So I see we got a couple people in the room who are here. All right, Don Johnson remembers. He says, I remember everybody joking on them Ford leaps. He's talking about when I bought Ford leaps. What is a leap? A leap is a long-term option, usually a year or more. Now, again, y'all know this show is basically really for the basics. Options, in my opinion, are a little bit long-term. Are a little bit more advanced. So I don't talk about them a whole lot. But Don saw it. I had haters. Don saw it. All right, so listen, y'all. I had a couple things come out today. Inflation. Inflation's on the lips and tongues of everybody's mouths. Everybody's talking about inflation these days, y'all. Now, as we get started, what do y'all think? Is inflation a problem? Do you think inflation is a problem? Go ahead and throw that in the chat and let me know what your opinion is on inflation. But they reported the inflation numbers today. Looking a little bit rough. Let me pull up that article real quick. But they talking about the inflation spikes. There are a lot of them. There are a lot of them. If you are ever on my Instagram channel, which is the Finance Rebel, you will see a lot of the stuff I kind of talk about during the show. I'm trying to pull up. I know it's spiked. I want to get the exact number for y'all. Now we'll put it on the screen and do my best to talk through this because this is also a podcast as well. So inflation hits a 30-year spike. Wowzers. That's major. Now, for some of y'all who weren't born 30 years ago, we're talking about the 90s, right? We haven't seen inflation hit this high in a long time. Now, I've been talking about inflation with y'all a bit. Inflation, I think it's a little overhyped because what we're really having is supply chain issues. What are supply chain issues? Just define it and break it down. Getting stuff from the manufacturer or the producer to the final point of sale. whether it's a wholesaler or a storefront, whatever it may be. But again, I've been talking about this for a while. There are ports, right? There are issues at the ports, especially in California, where people cannot offload the boats. So there's a bunch of boats circling in California, actually in other in other ports, cities as well. There's a big backup. So it's been hard getting stuff out. The fear is that they won't be able to get these boats unloaded by holiday season. And listen, it is November 10th, the eve of November 11th, the eve of Veterans Day, the eve of my birthday, y'all. So I'm gonna tell y'all that up front. So tomorrow is a very, very important day. A star was born tomorrow, but Christmas is right around the corner. Hanukkah is right around the corner. Kwanzaa is right around the corner. So are we going to be able to get the stuff in the stores in enough time to sell it? And it's not just about the stores, also online. E-commerce is experiencing slowdowns as well. So it's been rough. It's been rough for the economy overall. So again, a 30-year spike, consumer prices jumped 6.2%. Now, the way they judge consumer prices or CPI, consumer price index, they go and do a survey of prices of goods and services around the country. So, what's a loaf of bread in New York? What's a loaf of bread in Louisiana? What's a loaf of bread in San Francisco? What's a loaf of bread in Detroit and Chicago? And then they get all those, they do the same thing for eggs, same thing for milk, and they average them all together and they say, as the cost of these goods and services going up or going down. And that's basically how they figure out if the prices are increasing. And they call that inflation. Now, typically, you don't see real inflation hike up unless there's wage inflation. Now, we're starting to see a little bit of that too, but there's still so many people that are not working. So we're seeing a little lull in that as well. But it's coming on. And as I've said several other times, I feel the Federal Reserve is not doing their part. They're talking about this transitory inflation again. They're saying it's not going to be long term. I get that. But when you look at real estate is crazy right now. Real estate, it has slowed down a little bit. Mortgage has slowed down a little bit. We saw the debacle with Zillow. Oh, I saw a report about that too. We can talk about that real quick as well. But we saw what happened with Zillow, right? They're not able to flip homes as much because they were trying to sell 7,000 homes across the nation. Ran into a bit kerfuffle because they spent more than what they could get back, right? The money they spent on buying the homes, the money they spent rehabbing the homes was less than the asking prices most of the time. So that kind of backfired on them. But housing prices have been through the roof, and there is a shortage of homes right now, or how they were pronounced it right is a shortage of home inventory. Millennials are starting to buy. People like me, Gen Xers, are still buying. Baby boomers are still refinancing and oftentimes buying. So it's sexy. It's easy. For some, it's fun. Part of this is fuel because interest rates are so low. So when you have cheap money out there just floating around, interest rates right now are still 0%. Why are they still 0%? I don't know. I don't get it. I think you can start raising a half a point, a full point, something. We don't need super low interest rates. We basically have full, because the Fed talks about inflation. They want to see a 2% inflation mark, and they want to see quote unquote full employment. So we have full employment for the most part. Now, all of these numbers, right? Let's not be let's not be confused, right? All of these numbers are all approximates and estimates. They are not exact numbers. They are not exact numbers. That looks terrible. Right. So that that doesn't work for everything, but they are on target. The nation is on target. Why keep it at such a low rate? Now, if any of you are money nerds like me, you can go back and look at when inflation ramped up and what happened. One of the bigger times was back in the late 70s and early 80s when we had oil embargoes, problems with the Middle East, a big shift from Democrats to Republicans, from like Jimmy Carter to Ronald Reagan. A lot of things changed. And they talk about this guy by the name of Paul Volcker, right? Because also when you go back in that time, you will see interest rates. It wasn't uncommon to see 10% interest rates on CDs, on a 5-year CD, on a 2-year CD, something like that. But that was because of inflation. The cost of goods and services were so high. So there was this guy by the name of Paul Volcker, one of the former Fed Reserve chairs. He said, we're going to cut all this inflation stuff out. One of the first things he did, he raised interest rates, raised them drastically. And so that's one of the things I feel current Fed chairman Jerome Powell could do as well. Other thing the Fed did announce was that they're going to start tapering. And what does that mean? So they are out there buying mortgages, keeping the mortgage rates low. That's why mortgage rates are so low. They are actually pumping money into the economy to keep the mortgage and housing market going pretty strong. So again, I don't think that's needed. I don't think that's needed. So what you got now is an artificially pumped up market. We got supply chain issues, inflation issues. So what's next? You would think they would pull back on some of this stuff just to make it a little bit more palatable. Just to make it a little more palatable. So it's pretty interesting, right? That's pretty interesting. So let's take a quick break and look at some of these comments, get to some of the folks real quick. So Jose's in the building. Fiali said, "How you doing?" Don Johnson said, "Yep." Don said, "Yep." Folks was hating on me. He must know something we don't. Who's that? Who you talking about? That inflation is going to cause the market to be bearish soon. Yeah, I would agree with that. I would definitely agree with that. And now listen, if you are just joining and don't know who the heck I am from a can of paint, my name is Kamari Ellis. I'm the Finance Rebel. This is the Finance Rebel Show, and this is the Wealthy Wednesday Show. We are here every Wednesday. I am here every Wednesday answering your money questions, all right? The whole goal of the Finance Rebel Show is to help people increase their overall financial IQ. Not just literacy, IQ. There's a difference. Literacy is just being able to regurgitate something, take a test, and say, hey, this is the interest rate. IQ, however, though, can talk about how interest rates affect their money, whether it's a CD, whether it's mortgage rates, whether it's credit card rates. So I don't feel we need literacy. We need a raise of the IQ overall. So that's what we're all about here. All right. So Don Johnson says, hell yeah, inflation will kill anyone that isn't an investor or living paycheck to paycheck. Facts. All right, Miss Etfs here says, happy birthday to me. Thank you. Elijah's here, Financial Anatomy. How are you? And Felicia McCoy, how are you? Good evening. All right, let's see what some folks got. Now, remember, I am here to answer your money questions. So go ahead and throw them in the chat if you got any. And we are going to get to Elon Musk in just a second. All right, so Speed a Lot, welcome. Samuel, welcome. TikTok Tick, how are you? B Barbie, how are you? Alpreneur, how are you? Sunsky06, how are you? I think I got everybody. All right, Keith says rates are rising, therefore housing prices are dropping a bit. yes, they're dropping a bit, but it's November. We're in the fall. The hot season for real estate is spring and summer. So that's part of it too. That's part of it too. So it's a little bit of both. It's a little bit of both. All right. So I don't know if y'all saw this, but Mr. Elon Musk himself just raked in a whole $1 billion. 1 billion plus. He sold roughly 933,000 shares of his beloved Tesla stock. Now, if any of y'all know anything about Elon, y'all know he helped to found PayPal. Now he's on to Tesla, SpaceX. Y'all know I've been very critical of Elon in the past, or rather Tesla in the past. By the way, thoughts, feelings are still the same. And speaking to those Ford haters of mine, I need y'all to go back and look and see what stock has performed better year to date, Ford or Tesla. That's all I'm saying. I had somebody on my IG feed that got a little mad at me because I did a whole, like, what do they call them? Carousels, right? Where I talked about Ford, I talked about Tesla, I talked about who's doing better, who's doing worse, who makes more money, who has more money. And this guy proceeded to basically cuss me out. Revving every way to Sunday. And I was really tickled by it. Matter of fact, let me pull that up real quick before we get into Elon's tax problems. Pull that up real quick. Let me see if I can find that real quick. Did anybody see that post? Let me know in the chat. Let me know in the chat. I found it hilarious. It's Elon. The Elon tribe is bananas. The Elon tribe is bananas. So let's see here. Let's see if I can find it. B Barbie. All right, B Barbie, hold that thought. I'll get to that. I do have thoughts about that. B Barbie asked, what are your thoughts about GE splitting into 3 companies? All right, so I just put up here, what stock is better, Ford or Tesla, right? Not investment advice, for entertainment and educational purposes only. That's what all my posts are, y'all. But there was one particular person. Where is he at? Is this it? Systems transformation, where it says LMAO. You were saying that same shiz when Tesla was $100 a share. Listen, Tesla has definitely been on a run. I've said that. I've said that I wouldn't short Tesla, but I also said that they weren't profitable. They really just became profitable. So if all this hype and all of this stock price, again, tied into what Elon Musk was able to cash out on the day, there's still a mismatch, right? But he kept going on and on and on. And all I asked him was, did you read the slides? Right? Did you look at the slides? That's all I said. He kept going on and on. Clearly, the one unable to admit when you're wrong, as you've been talking shiz about Tesla. I don't want to get demonetized, y'all. Performance for the past 2 years. And yes, oftentimes the market is not in sync with the actual business, with the fundamentals. I've talked about that. And if you want to count Tesla as a win, that's cool. That's cool. Right. And so I asked him again, did you look at the slides? And there was a reason why I kept saying, did you look at the slides? Because, ladies and gentlemen, I've learned a long time ago that if I'm ever going to put anything out there, it needs to be backed by facts. It needs to be backed by some research. So I do research. I at least look, right? I don't always get a chance to do a deep dive on everything just because time doesn't permit. But I just went through it, right? We look at Tesla's revenues, about 14 billion a year. We look at their profits, a little under 2 a year. Now it's starting to grow. It's getting better. No lying there. It's getting better. We look at Ford. Ford's doing 35 billion a year on average. Had a down quarter in the second quarter of 2021, right? Tesla, 1173. Now this was last week. This was November 3rd when I put this up. Now I'll put up the year-to-date return, 66.27%. That's what I put up year-to-date. This is from Yahoo. These are not my stats. These are not my figures. Third-party site. I put up Ford, $18.26. Now, again, this was November 3rd. What's their return year-to-date? 107.74. 107%. 107.74%. Almost 108%. And now I saw Ford went to 20. I know it dropped back down in the 19s. Not sure where it closed at today, but Ford is outperforming Tesla this year. Will it remain the same? Who knows? But for right now, I was able to show that Ford is doing pretty good, and they reinstated their dividend. Tesla doesn't pay a dividend. So again, I thought that was pretty funny. But I don't know. I think people think I'm here for the likes, the clicks, and all of that. I'm really not. I'm here for y'all. And if I'm going to be here for y'all, I feel I have to be right and exact. What's up, Shelby? Yeah, Keith, no fake news. All right, TSC LLC, how are you? Welcome. Teacher 1130, how are you? So, I don't really get off on like being right. I get off on doing good. And so for me, doing good is telling the truth so people don't get scammed. Because I see a lot, I've talked about this a lot. Everybody is this investing guru all of a sudden. He just got on it last week, but they've got 1 million followers on TikTok or Instagram or whatever you have it, and now they're experts. So again, I find it very, very interesting. So again, we were talking about Elon Musk. We were talking about his new tax bill, which is going to be crazy. I wanted to talk about this article. Now, y'all saw Elon did this whole poll on Twitter asking people, should he sell or not? Making people think that he was really going to take the input of his Twitter following. But sounds like he already had his mind made up. Actually, they say he had his mind made up around September 14th. So he's been cooking up this issue, this scheme, this marketing ploy, whatever you want to call it, for almost 2 months now. So let's take a look at this real quick. Because I know the Elon tribe might get mad at me. And I feel like we've been talking about Elon almost 2 weeks in a row, because we talked about Elon and Tesla last week. But true to fashion, the man knows how to stay in the media. True to fashion. So Elon Musk sells $1.1 billion in Tesla stock before a Twitter poll SEC filing shows. Now, as I told you, when this came across as an alert, I was actually working on a tax return for a client who actually has employee stock options. Elon Musk has employee stock options. So, Saeed, how you doing, brother? So Elon Musk has employee stock options. He does not take a salary from Tesla. I get it. But again, he's got great stock options. So as I'm reading through this article, I'm just skimming through, and I hope everybody can see this. Let me blow it up just a little bit. So Elon Musk polled his Twitter followers last Wednesday about whether he should sell Tesla stock, but his plans to sell were already in progress. Now, does that sound forthright to you? Does that sound like that's full transparency to you? Does that sound like he's operating in trust? I don't know. What do y'all think? But filings made public by the Securities and Exchange Commission. Now, listen, anytime you are a major shareholder in a publicly traded company, you have to disclose your movements to the SEC or the Securities and Exchange Commission. Why? They want to make sure there's no market manipulation going, because he sold a good amount of stock and he kind of telegraphed it, right? So it could have been bad for him. Now, as they talk about more in this article, that um, the stock did drop on Monday when he sold, but it rebounded today. So, or rebounded on Tuesday, and again rebounded again today. So, filings made public by the SEC on Wednesday afternoon showed Musk selling more than 930,000 shares of Tesla. Out of more than 2.1 million options, he exercised at a price of $6.24. Now, that $6.24 number is important. It's important. All right. And we're going to talk about that. We're going to talk a little bit about taxes just a little bit too, because I want y'all to understand this, because there's a lot of people that go through this but don't think about it, right? So again, 930,000 shares, okay, of Tesla stock. Musk sold the shares for more than $1,100 and less than $1,200 a piece. All right, so let's just say, for this example, $1,150, $1,150. That's the number we'll use, somewhere in between there. Okay. All right. The electric car chief executive made the plans to sell Tesla stock on September 14th, according to the SEC filings. Musk asked his more than 60 million Twitter followers whether he should sell Tesla stock. Now, 60 million people. Musk is definitely a polarizing figure. He already had plans to do this, and then he did this poll, I believe, over the weekend. Why? Why do this? And then he had more than 3.5 million votes that were cast with the resounding yes. Now, if you're following along, last week we talked about Elon getting challenged by the UN Commission on Food or Hunger. And he said if he sold 6% of his stock, he could end world hunger. Well, we talked about that last week. That's not necessarily true. But Elon knew what he was about to do, and he latched onto that, and he used it. I'm not mad at him, but let's call a thing a thing. He used it to pump it up. He used it to bring more attention to the company. He used it to get more attention to him. And then what did he do? Sold the stock. And he was already planning to do it, right? Did the whole Twitter thing with the guy from the UN, then put the poll out, kind of acting like maybe he would sell stock to end world hunger, because he did kind of mention that a little bit. He said that if somebody could tell him empirically if selling 6% of his Tesla stock can end world hunger, he would do it. But he already had these plans made. The plans were laid. It was already a done deal. And then he announces the poll over the weekend and then sells on Monday. So the stars aligned, but he helped to align them. I feel it's a little misleading, but again, that's just me. That's just me. I say let the market do its job. Let the market get the credit for the company, or not the market get the credit for the company, but let the market get the right valuation for the company. Don't help to try to inflate the value and price of the stock, which he's done, which people have played into. And again, it's already done. And I know Elon Musk is not listening to me, so it doesn't matter. But for you, the audience, for you, the viewers and the watchers and listeners, I think it's important to understand this and understand how a lot of this works. All right. So when I looked at this, right, $6.24. That's what he paid for the stocks. That's what you get, or that's what happens when you have to exercise your employee stock options. So you have to pay it. Now, there's a funny little word that the IRS uses when we are talking about stocks, or actually any asset that you might sell. It could be stocks. It could be real estate. It could be Bitcoin, right? It's called cost or basis. Now they said he brought it for $6.24 a share. So then what you must do is multiply 930,000 times $6.24. $6.24. That was his all-out cost to buy that stock. Now, typically, you're not really spending anything when you're an employee. It's more of a gift, but that's how they evaluate it. That's the accounting of it all. Now, he sold it, like I said, at 11.50. That's the number we're going to use, 11.50. So he profited over, let's say 11.40, 11.44. So he profited roughly $1,144 off each share. And he sold those shares. He sold 930,000 of those shares, right? So and I took some notes. When he sold it, again, it was 5.8 million. That's what it was worth. That was the cost basis. Now, you need these numbers when you're reporting them to the IRS. Okay, keep that in mind. And then he sold, right? He bought them at $624. Then he sold them at $1,150. He sold 930,000 shares at $1,150. That's our estimation, y'all. Hopefully, y'all all follow along. That netted him, or that grossed him. That was his proceeds were $1,069,500,000. Again, $1,069,500,000. That's what he took on. Hell of a profit. Now, again, getting back to the taxes, right? This is all the formula. So to figure out what he has to pay tax on this, you subtract the cost basis, which was the roughly $5.8 billion from the $1,690,000,000. Excuse me, $1,069,500,000. So he's got a profit of roughly 1,600,000,000. Matter of fact, 1,063,000,000. Yeah, 64. Let's say $1,064,000,000, 500,000. So he's got paid. So he has to pay tax on $1,064,500,000. And the highest tax rate is roughly, I want to say it's 37%. Let me look at the tax rate. And the IRS actually did just release new tax rates for today. And let's look at this. Let's look at this because they change every year. So it's 37%. Now, if any of you know, income tax rates is like a stair steps. It's literally like a stair step. So the lowest tax rate is 10%, and that usually runs from $1 to $995,000 if you're single. And I believe Elon is single now. He's not married anymore. Now, you'll step up through that to the next tax bracket, which is 12%. So then you'll pay 12% on your next $9,951, all the way up to $40,000. So in between that bracket, in between that $9,951 and that $40,524, you're paying 12%. And then it goes so forth and so on. I don't want to bore you all by reading all the brackets, but the tax rates are 10%, 12%, 22%, 24%, 32%, 35%. And the final one, the biggest one, is 37%. And that is for income over $523,601. Again, anything over $523,601 is taxed at a 37% rate. That's a lot. So does anybody have their calculators out? Does anybody have their calculators out? So roughly how much is Elon going to pay on that rate? And you might as well just say it's all 37%. Don't even waste your time going through all the other steps. So basically, he's paying. Let me do the numbers. Let me do the numbers. So remember, he had a net of 1,064,500,000. Okay, 1,064,500,000. That was his. That was his net on this sale. So a lot of checking, a lot of cheddar, a lot of money. It's a lot of zeros. All right. Has anybody figured out how much taxes he's going to pay? Oh, B Barbie is fast. Yep. So B Barbie got it first. Seems like he's going to pay $393,306,300. It's a lot of money. It's a whole lot of money. That's a tax bill, y'all. That is a tax bill. So I guess. Oh, Jose got it too. Jose got it too. 393,865,000. $393,865,000. That's a lot of money on his tax bill. But listen, he still got a little under $1 billion left. So he's got about 800 billion left. That can go a long way. Right? And I'm using round numbers, y'all. That can go a long way. That can go a long way. So what do y'all think? What do y'all think about Elon? Did Elon manipulate the markets? Is his tax bill too high? Should his tax rate be lower? What do you think? What do you think? Now, if you're just joining us, I'm Kamari Ellis. This is the Finance Rebel Show. Every Wednesday, we do our Wealthy Wednesday segment. All right. The Finance Rebel Show is all about raising the financial IQs of people in my community, the Black community. So we're here every Wednesday, 8 p.m. to talk about this money, to get a better understanding of this money, and not just to be literate around money, right? Because literacy kind of speaks to the basic level of things. You don't need to be basic about anything, especially not our money, right? We need to upgrade our money, upgrade our financial IQs so we can take control over our lives and our destinies all at the same time. All at the same time. So I know B Barbie had a question. All right. So Mr. Murdoch, what's up, Taj? How are you? Hey, Tiffany, how are you? What's up, Chief? How are you? Yes, sir. Great hearing from you as well. B Barbie asked me a question. B Barbie 2 asked me a question. So we'll get to this, right? Any other questions, go ahead and throw them in the chat and we'll get at them. But B Barbie asked, what are your thoughts about GE splitting into 3 companies? I think it's fine. They've been floundering for quite some time now. GE, one of the oldest companies, one of the oldest publicly traded companies ever. They were one of the original Dow Jones 30 back in like the 18 whatevers. But they've been around for a long time. And I know just off the top of my head, they're splitting into 3 units: aviation, healthcare. It's one other: aviation, healthcare, and I will find it. Give me 1 second because they announced that yesterday. All right, aviation, healthcare, and energy. They make big airplane engines. They've got a lot of technology around healthcare in terms of the machinery, the medical devices, and they actually make the big wind turbines as well. So, I mean, I think it makes sense because at this point they're too big. They're almost like too big to fail, almost too big to grow, and they've been floundering for quite some time. They've been kind of just stagnant, and so Probably at this point, it makes sense to break them up so each one of the division heads can now take charge of the individual companies, and they can focus solely on dominating those markets. They can focus solely on dominating those markets. So I think it's a good thing. Now, B Barbie 2, what do you think about it? Are you an investor in oh man, what are we doing here? Are you an investor in GE? Are you an investor in GE? Now, GE is one of those old blue chips that a lot of people love to run to and get at. But things have changed. They got dethroned. They got thrown out of the Dow 30. So nothing stays the same, y'all. The only thing that's constant is change. That's about it. So again, GE breaks up into 3 companies focusing on aviation, healthcare, energy. Trying to see if there was anything in here that was interesting. Matter of fact, let's do this. Let's see. I don't know if I set this up right, but there's a clip about this. So let's go ahead and share the clip. Give me 1 second, y'all. Give me 1 second. And yes, I don't think, yep, I didn't hit the button to share the sound. So let's go ahead and check this out.
Do you get heartburn more than twice a week? Try Prilosec OTC to stop your heartburn before it starts. Just 1 pill a day blocks
Sorry for the
heartburn
commercial.
24 hours. Take the Prilosec OTC 2-week challenge to experience what zero heartburn feels like.
Let me know if the audio's good, y'all.
In turn, I think it signals the end of the conglomerate holding company thesis, that there's better valuation for each of the companies, which are strong leaders in each of their markets.
What we've announced here this morning is really a 2-step process to yield those 3 industry leaders. I think if you look at the timetable for healthcare, there's no question that that is the business most ready to go, not only in terms of its performance, but some of the preparation still on the shelf from the IPO we considered a few years ago. But we're going to need 2022 to get ready. If we can move more quickly, we will. But Pete Arduini, our new CEO, starts the first of the year. We've made some other changes with that team. We'll do this as quickly as we can, but most importantly, we'll do it well.
Aries kind of reshaped, not just GE to work, but, to reshape it in the format that he really believes can generate the most value.
All right. So, that was interesting. I didn't even get all of that. They're going to break the 3 companies up, and aviation, and the aviation unit is going to remain GE, and the CEO is going to head up that unit. That tells me that unit and that CEO, they probably feel they have the biggest bang, the biggest opportunity. However, healthcare is not going around anywhere anytime soon, and folks are still, I think the stats were before, I need to go back and check them, but 10,000 people turn 65 every day. So people are living longer, so healthcare is going to be an issue for a long time. So, all right, let's get to some of these questions. Oh, my man, George Dandridge is here. How are you, brother? Crystal Financial's here. All right, B Barbie says, I'm an investor in G, but maybe we'll consider it or not consider it. All right, and Wall Diva's here. All right. Wall Diva just ate her Beyond Burger. All right. Beyond Burger fell, or Beyond Meat rather, right? I shared that on my IG. Well, Diva's all about her fitness, all about eating well. So she said she might make the burger because the screen looked really scrumptious. So matter of fact, let me pull that up real quick. Because I said I might look at where's it at? There it is. I might look at Beyond Meat. The non-meat space, in my opinion, is going to get bigger and bigger. Now, I did think Beyond Meat was a bit pricey. I don't have the prices up in front of me right now, but that does look good. Now, I'm not really a fan of tofu and seitan. I would rather just eat vegetables. That's my opinion. But some of the other folks like the option of eating a meatless burger. Now, my daughter is one of those, right? She's a vegan, teenage vegetarian. Let me correct myself. I don't want to get any trouble. But she's a vegetarian and she likes it. For me, it's a little too oily. For me, it's a little bit too oily. Right. Wellness Diva, you are correct. It is not tofu. But I was just talking about all the options that are out in the spectrum. But I think that sector still has more growth, especially as we get more into having it distributed. I want y'all to think about something because I go through these fits and starts where I don't want to eat meat and I want to get healthy. Think about this. We all know vegetables and fruit are the most healthy thing for us. But anytime we ever go out to eat fast food, the main meat option that we are shown is what? Pork. Even with all the turkey lovers, even with all the beef lovers, pork is still the number one option on all of these menus. Why is that? And pork's not cheap either. But why is that? Has anybody ever given any thought to that? Like, we don't promote the real healthy option. We'll promote the options that aren't that healthy. So, this all goes into play. Y'all probably say, well, Kamar, I don't want to hear you talk about food. But this is from an investor's point of view. So there's plenty of market share to still be had because, again, people are living longer. Some people are getting more health conscious. I don't know if everybody really is, but there is a trend, I believe, to be more healthy. And we're seeing it at the likes of McDonald's and many other fast food places where they're offering Impossible Burgers or Beyond Meat, more salads and things like that. So I just want to talk about that real quick. All right, so I see I got some questions. Debt-free dad is in the building. What's up, bro? How are you? Jose says Elon manipulated the market to his advantage, but not to the detriment of the underlying company. I don't know. Sometimes you can grow too fast. All right, thoughts on the Revving IPO. I copped some. My first time on release buying a stock. I normally like to let that new smell wear off. Okay, congratulations. You are now part owner in the Revving release. Matter of fact, I talked about that as well because it was over. It popped on the first day. It popped on his first day. Y'all know I do not like IPOs on the first day. I would rather you buy later, right? See if the stock is going to pop and then come back, because that is normally the trend of IPOs. And I just believe, just from study, not just from what I feel, right, but from study analysis, that what's the rush? A good company is a good company. I always talk about the time I missed buying Bank of America at $4.50. I don't know if y'all have ever heard that story, but I was on radio. I announced it. I said, Bank of America is not going into bankruptcy. It's trading at $4.50. And I waited, and it jumped, and then it fell again, and it jumped, and it fell again. But I wound up buying it around 7 or 8. But I complain about the 450 because I missed out on a bunch of gain. But right now, Bank of America is in the 40s. So does it really matter? I mean, sure it does, but not really. It still made money. It still made money. So the saying is what's the saying? Pigs fly, and hogs get slaughtered. Meaning that when you're greedy, you tend to get hurt. When you're greedy, you tend to lose a lot of money. So now, what is the ticker symbol Reven, right? And they are an electronic company at the market. Again, these are my opinions. This is not investment advice. This is not a suggestion to buy or sell. This is not a suggestion to buy or sell. Let's see. I'm trying to pull this up, y'all. This is not a suggestion to buy or sell any securities. If you are looking to buy or sell any securities, please seek the guidance of an investment and or tax advisor. Now, does anybody know what the IPO for Reven was? Anybody know? Help me out, y'all. Somebody throw the price for Reven in the chat. Now, true to form, what the study shows is that the price popped. It went up to, what did it go up to? Went up to 119 in the first hour of trading today at 12:30. 119. Then fell to 105. And then in the second hour of trading, it dropped to about 95. And then in the third hour of trading, it was about 104, ultimately closing down at about 90. Yeah, it was closed at $100. So it opened at let me go back. It opened at 106. It opened at 106. Can y'all, wait a minute, I didn't share this. So I'm running my mouth. Didn't share this, got too excited. Hold on. Here we go. All right. Went to 106. Let me take this down real quick so y'all can see the screen. Y'all can see what we're talking about. Give me 1 second. All right, so this is the hourly chart for Reven Automotive. All right, that's the stock that IPO today. Again, I am not a fan of IPOs. Not a fan. Again, open with a bang. Now these are candlesticks. So, but it's telling me that it opened at $106.75. Within the hour of that time of that stock opening today, it went on sale at 12:30. It jumped to 119. So the frenzy hit the market, hit that stock, made it jump, made it pop. And then just like a balloon, after you let the air out, it just fizzled out. And then it started going down to 98. And then it went down to 95. And then it went down to 98, ultimately closing at $100. So it closed lower than it opened today. Now, I don't know what's going to happen tomorrow, but I would rather wait. A lot of times we jump into these IPOs because we're afraid to lose. We got some FOMO. All right, thank you, B Barber. B Barber says it IPO'd at $78. So from the 78, and then it popped to the 106. But guess what? Average everyday investors can't get the $78 price anyway. It's part of the reason why I don't like it. Now, you got some of these trading apps that are giving people access to some of the IPO shares ahead of time. I believe I got access to it. I didn't buy it, but I know I got a notification on my phone at like, at the end of, what was it? Today or yesterday, said I could buy it using one of the apps. I don't want to endorse any apps right now, but you could buy it. I passed on it because it wasn't anything special. Listen, if I'm going to buy IPO, it's got to be like the next best thing since sliced bread, the will, or Black Jesus coming back. It's really got to be something special. Because again, I'd rather wait. If it's that hot, if it's that sexy, I would rather wait to buy it later. Now, let's keep an eye on it. And hopefully, Debt-Free Dad, you made some money on it, or you'll make some money on it. You're holding it for the long term. It's a good company. Hopefully, it's a good company. I haven't reviewed it. I have not looked at any other fundamentals whatsoever. I'm just looking off the chart right now. So let's see what happens. All right. So one first here says, what points do you have for IPOs? I just told you. No points. Mom and pop, regular folks should avoid IPOs on the first day. If it's that good of a company, just wait. Listen, investing is like relationships. Doesn't make sense to rush a relationship. Now, we an adult audience, we know what happens sometimes when you rush too fast in a relationship. A lot of times you get into a relationship you ain't had no business being in the first place. You ain't had no business messing with that gal or that boy. So they just left them alone. But sometimes you get so caught up in the excitement, the hype, the thrill, the excitement, that you're like, caution be gone. She's cute. He's fine. I like him. For the moment. I think they call that lust. And usually lust doesn't last. But again, that's what folks like. All right, now this is an interesting one, y'all. Let me take a sip of water. I was reading this Thunder. Now, I am not a relationship therapist, even though there's been oftentimes that I've people seek my counsel on their relationships. But with that said, Thunder says, I'm thinking about squirreling away $50 a paycheck without my wife knowing. What would you suggest I do with it in case I get caught? I need a good excuse to what I was doing with the money. Let me read that again, y'all. I'm thinking about squirreling away $50 a paycheck without my wife knowing. What would you suggest I do with it in case I get caught? I need a good excuse to what I was doing with the money. So, first things first, I don't want your wife coming after me and saying that Kamari told me to do this. Because Thunder, you're broadcasting this to the world. Now, we only got maybe, I don't know, 10, 12, 15, 20 people on here right now. But sometimes we will watch these on the replay. So for the record, Thunder's wife, I am not co-signing this. Listen, if you got married, this is what I believe. If you got married, you should be open and honest about your money. That's number one. That's number one. And yes, ladies, I expect the same thing with your husband. I don't believe in this he pays, she pays, whatever, y'all team. And all of the most successful relationships that I've seen work together as a team. And the team will dictate if he pays, she pays, or they pay together. But if you hear what I'm saying, right, it's the team. Because sometimes he might be up and sometimes he might be down. But the vow say for better or for worse, it's sick or poor, right? So I think sometimes we put these obstacles in our way for these relationships to fester and have issues without the need for having issues. But I'm not going to preach to y'all. So that's number one. Number two, financially speaking, you can't spend $50 without your wife knowing or get mad. If you brought a pair of J's every paycheck, would your wife get mad? Or let's just say a pair of sneakers. Or if you went out to dinner. I don't know if she would be mad if you spend $50 a paycheck. I don't know. I got questions. That's why I'm asking. But what I would say is, Thunder, if you haven't, and being totally honest, totally serious here, if you've never invested before, I would do one or two things to start. One, if you have not invested into your 401k, invest in your 401k. All right, let's make that clear. You get the best tax advantage, and depending on your company, you might get a match, and that match is free money. Again, I'm operating in the blind. You ask the question, I'm going to try to answer it to the best of my ability. 401k, number one. Number two, if you're just investing in personal account, write a non-401k account, I would look at investing in something in just a regular brokerage account to start, just to start. So if you like Nikes, you like the sneakers, buy some Nike. Take $50 a paycheck and buy some Nikes. If you like Apple, you got an iPhone, take $50 and buy some Apple. If you like Ford, this is not an endorsement or a recommendation to buy or sell. You can buy some Ford. If you don't like anything, because people tell me they don't like anything at all, you can buy what's called an ETF. So ETFs are exchange traded funds. They're basically a basket. In this context, they are a basket of stocks. They can also be a basket of bonds, a basket of foreign currencies, a basket of commodities, a basket of did I say bonds? I think I said bonds already. They could be a basket of anything, even crypto nowadays. So you can pick one. The one I normally suggest beginners is VT. Again, that is not a recommendation. This is for entertainment and educational purposes only. VT is Vanguard's. It's either VT or VTI. I always confused. Yes, VT. Vanguard Total World Stock Index. So that buys stock throughout the whole world. Mainly all large cap or big company stocks. Big companies. So that's what I like. That's what I would suggest. Tell me what you think about that. All right. Winford, what's up, Winford? How you been? I ain't seen you around in a while. So Sev for IPO. I don't know if I've heard of Sev before. What is Sev? Uh 9103 or 03. I hope I'm saying your name right. Welcome. B Barber 2. No, I'm talking about VT, not VTI. They're both popular, but I'm talking about VT. Hats and MD, how are you? Welcome. All right, so Sev IPO. I don't know about Sev. Never heard of it before. Oh, that's the Sono Motors. Okay. Sono Motors files for IPO. Again, I don't like IPOs, y'all. Y'all gonna get the same thing. Y'all can say whatever you want to say about me, but what you cannot say is that I am not consistent. I will die on my cross until I get some new information. Until the historics, until the trend changes with IPOs, I'm going to stick to my thoughts on IPOs. And every time y'all ask me about IPOs, I go to the chart. And the chart shows every time what my historical research has taught me. They're usually not great for individual buyers. It's usually not good for individual buyers. All right. So, okay, got that. All right. Okay, got that. Yep, got that. Okay. All right, Thunder. So you're already investing. So you have GE, you have MRO, and you have Love. Love is Southwest. MRO is something popular too. I just can't think of it off the top of my head. MRO. What is MRO? But good. I'm glad you are on your investor journey. Oh, Marathon Oil. Ooh. Ew. I think one of these apps gave me some Marathon Oil, like a piece of it. $16.60. Just looking it up here on the screen real quick. It's nowhere near its all-time high. Yeah, I would have to look at the fundamentals. Looks like it's starting to build a long-term trend. Yeah, I would definitely have to look at the fundamentals to really go through it. But good. I'm glad to see you are on a tear. Yes, GE did have a reverse IPO. Yeah, about a year ago, yearish, somewhere around there. All right, you're going to spin off and receive stock in a train company. Yeah, I remember that. I do remember that. All right, looking purchase stock of Sono Group that's having an IPO with tickers IPO. What are your thoughts? Don't buy it. Well, I'll say this, right? Do research on the company, right? Understand the full fundamentals of the company, how they make money. Are they making money yet? If they are doing an IPO, you can look at what's called the S1. And the S1 is the document that the Securities and Exchange Commission requires. That's the document that the Securities and Exchange Commission requires new companies going public. So I would suggest you reading that. So I'm pulling it up now. Pulling it up now. Let's see. I'll share this with everyone. Memento, y'all. Give me 1 second. 1 second. I'll pull this up. And that is a little skinny. Let's blow that up a little bit. So this is the S1. So this is a form that all the companies that want to go public, trade their stock public, have to file. So I would read this. I know somebody's going to be like, I don't want to read all that. Well, listen, if you don't want to do the work to be an investor, then, and if you want to be a lazy investor, then that's a combination of potentially losing your money. Now, you might get lucky. You might get lucky for a little bit. You might make money in a little bit, but in the long haul, you won't. And really, these S1s, right, are very, very, they're great educational tools. One, you get great insights about the company. Two, you also get other insights about the industry that they are in as well, which you can then apply to other investment ventures or themes that you're starting to form. Okay. So just looking at this here real quick. We are an emerging growth company as defined under the federal securities laws, investing in our common stock involving risk. See risk factors beginning on page 14. Okay. Something to pay attention to. Then on this sheet here, it talks about some of the lead investment banks: Morgan Stanley, Goldman Sachs, Allen & Co., RBC, Raymond James, Stifel Nicholas, Jeffries, KKR. All right, so this is the smart home sound system. Oh, yeah, these are the folks that make the great speakers. Not trying to bias anyone. TVs, movies, sound that brings you together. The new Sonos Beam with Amazon Alexa. So again, I would look at this. I would look at the financials. I would read the risks. I would read the letter from the CEO. I would read all of it, right? So let's just look at some of the risk real quick. We have a recent history of losses and expect to incur increased operating costs. So if they have a history of losses, what does that tell you? Come on, somebody put that in the chat. We're going to do this together. In fiscal years ending October 3rd, 2015, October 1st, 2016, September 30th, 2017, we had net losses of 68.8 million, 32.2 million, 14.21 million, right? So that's showing they've had losses, but the losses are getting smaller. In this case, that's a good thing. In theory, we have an accumulated deficit of $174.9 million as of March 31st, 2018. We expect the operating expenses to increase as we expand our operations and execute on our product roadmap, right? So whatever they're bringing out, that product or products are going to cost more money to bring to market, right? So when you're going through the S1, again, we're going through the S1 for Sonos, ticker symbol SEV, that is due to go be an IPO soon, probably very soon, because the IPO market's hot. So those are the things you want to kind of factor in, right? They're going to spend the money on research and development, sales and marketing, legal, accounting, information tech, administrative expenses. So all of those things are coming into play. All right. So again, I would take the time and read through this. Now, I'm not stupid. I know a lot of folks are not going to read through this. Urban Fatboy Fit, what's popping, brother? All right. Now you said, where is it? Where's what? You're talking about the company or the S1? All right. So for my IG folks, I am broadcasting live on YouTube, Facebook, and Instagram. And these will all be put together and put out on my podcast as well, the Finance Rebel Show, which you can find on Stitcher, iTunes, Spotify, Google Podcasts, and all of that, right? But for right now, I'm sharing the screen, and my folks, the family on YouTube and Facebook can see the screen. Now, if y'all want to go see the screen and you're on IG, just go ahead and click the link in my bio, click the YouTube link at the top of that, and you can come on over and watch along with everybody else. But hopefully I'm doing a good enough job so you all can listen to the words of my voice and understand what's going on. KU joined. How are you? Welcome. All right. Conflicts with our distribution technology partners. So they have conflicts with their distribution chain. They have supply chain issues, y'all. That word has been a buzzword for quite some time now. And so let's just share these. I'm going to share this again on the screen. All right. So, this has been an issue for them. It sounds like this has been an issue for them, but they've got roughly $117 million in cash. It's not bad. But they're still taking losses. And this must be an older S1. So maybe they filed and retracted it before. All right, so let's go to use of funds, use of proceeds, right? You always want to know what the use of proceeds are when companies are doing these IPOs. You want to know where the cash is going. Follow the cash, follow the money. That will usually answer a lot of questions, right? In this case, we're talking about stocks. I talk about stocks from a long-term perspective. So if we're talking about stocks from a long-term perspective, we're really talking about the businesses and how the businesses are going to perform. And so when we look at the use of proceeds, now we're going to wonder, do they know what they're doing? Do they know how to spend this cash? Do they know how to get a multiplier effect out of this cash? Because that's important. a fool and his money is quickly separated, right? And so you can get money, but if you don't know how to put it to use, it's like not getting any money at all. So let's see here. Let's see here. I'm trying to see exactly what they plan on using the money for. Usually there is a list. Capitalization, accrual basis, dividend policy. Oh, here we go. We have not yet determined our anticipated expenditures and therefore cannot estimate the amount. So, again, they don't have any direction on what they want to do with their funds. I'm out. You know what? I would suggest anybody watch Shark Tank. Damon John and the rest of the crew. Watch Shark Tank. Look at how they go through evaluating deals. Now, I don't always agree with them, but they always usually like, can a company sell? Can a person sell? Do they have a distribution chain? Do they have a unique product? Are they able to get the product to marketing or to the market? Can they get the product to the market? All of those factors matter. All of those factors matter when we're baking in a cake of creating a good company. So if you're looking to create a good company, you want to know about all those things. So for me, it'll be a hard pass. And Winfred, I appreciate the super chat, the $5 super chat or super sticker. I don't think I've ever got one of those before. All right, well, thank you. Appreciate that. Got some birthday money. I got $5 that can buy me some lunch. Appreciate that. All right, Debt Free Dad said he brought Reven at 79. The open was at 79. Now, Debt Free Dad, I'm gonna ask, because you're talking about it, what did you get it at? What was your order filled on? Right. So Jose says low was at $95.20, and the close was at 119. No, well, the close was at 106, but I don't know what hour you're talking about, Jose. Going back to Reven. Got a bunch of 4 to 6. Ooh, oh, you're rich. Let me hold something, man. Oh, yes. All right, Jose, I got ahead of myself. All right, Jose says invested. She can't get mad at you if she finds out that you squirrel away making money. So again, we're going back to the issue of Thunder putting money away in secrecy. I'm not about doing anything in secrecy. Believe it or not, y'all, I often get in trouble for telling the truth. Now, I'm not going to talk about all my accounts of getting in trouble for being a truth teller, because some people say I tell the truth, but it's not done well, or it's too harsh, or whatever. So those are some of my flaws. Just being a little too transparent now. It's TMI, sharing too much. But I would say, if you can't do it in the light, you shouldn't do it in the dark. If you can't do it in the light, you shouldn't do it in the dark. And y'all should be on the same page, right? We don't talk. Like, one of the most detrimental things to the financial health of a relationship or any relationship is transparency, truthfulness, right? Being on the same page. And if y'all can't be on the same page, then what we talking about? No, it ain't. I ain't wrecking a happy home. I don't want no parts of that. All right, so Thunder says, I'm good, Kamari. I'll let her know honesty is the best option. Yes. Now, I hope you're not being dishonest when you say you're going to let her know, because honesty is the best way. Yes, let her know. Winfrey says, do gender roles play a factor? Because what do you think of mean for women if your husband splits the bills, you have a roommate, not a spouse? I've talked about that. I talked about it earlier, right? I'm not into any of these memes with the women. I'm not into any of these quote unquote guru people who have no training as relationship advice. that people love to latch on to. I'm here for truth and honesty. I'm here for transparency. And if you are with a man and a man, or a woman and a woman, or a man and a woman, whatever your flavor is, y'all should really be honest about a thing, about what y'all doing. If y'all not, then you're not. And listen, I'm here for all the meme jokes. Like, I laugh at them all the time. Some of them are funny. A lot of them are shrouded around with a lot of stupidity, though, too, right? So you got to remember what we're laughing at. You got to remember what we're laughing at. In the book, Think and Grow Rich, Napoleon Hill says that, I'm paraphrasing here, y'all. Basically, your success can be dictated by how good or how bad your spouse is. And obviously he was writing it from a man's perspective then, but that can go both ways, right? You have terrible partners on both sides of the genders, whether it be male or female, care what your orientation is. If you don't have somebody that's in alignment with you, open with you, trusting you trusting them, it's a recipe for disaster. It's a recipe for disaster. But I know that's not sexy. That's not fun. I'm talking about doing the hard work. Some of y'all would probably rather me get on here and talk bad about women, black women especially. I ain't doing that. I love black women. Y'all don't hear me though. So, all right, Death-Free Dad is clapping. All right, so you with me. All right, so to be honest, right is the best comment. Yes. Now, Winford, that's what Wednesdays are for. There are 4 questions and answers. Winford gave me another $5 super chat. Appreciate you, brother. Yep. Don. Now I like that. Now Don said, instead of doing it in secrecy, tell her you're investing to give her a gift, the gift of a more financially secure future. So, but yeah, I am not a traditionalist. Listen, my name is the Finance Rebel. I'm not really down with a whole lot of tradition. There are some traditions that are good, but oftentimes I find it saying old fashioned. I'm black. I approach everything from a black perspective. So when you say to me old fashioned, whose old fashioned are we talking about? Now I ain't trying to get political, but if we're talking about black folks, our tradition wasn't necessarily our traditions when we're talking about old school values and morals. And I'll go a step further, right? I'll just say this. Black women have always been leaders in our communities, even back in antiquity, back to the motherland. They've always worked. Oftentimes, they've always had a power position in the culture. They were not just, what's the word I'm looking for, y'all? Doormats. That's another culture, but I'm not trying to go super there. But since y'all brought it up, guys, an investor, how are you? Walter, how are you? Nicole, how are you? But I'll say this: like, start looking in history, y'all. It all ties into wealth, all of it. One of our biggest problems, now y'all got me going. One of our biggest problems is we're trying to pretend to be something that we were never designed to be in our divinity. And y'all got me going. I wasn't trying to go there, but I'll just say this. And the divine design, a lot of times we are trying to be things that we were not designed to be. I'll leave it at that. Here we go. All right, so Sunday says the MRO, I brought around 3. Nice, very nice. James, I got it when the pandemic hit and the bottom fell out of oil and the airlines were struggling. Yeah. Nice buy. They ain't making no monies. I'm not, I missed where that came in, Jose. Oh, Thunder, you're spoiling me, brother. Thank you. Thank you for the $3 super chat. So that's 3 super chats for Thunder tonight. Appreciate you. Now, if anybody's so inclined, feel free to give to the super chat. I mean, super chat. Feel free to give to if you're not on YouTube or anywhere else, to send some money to Cash App. My Cash App handle is The Finance Rebel. $, The Finance Rebel. All right. All right. Jose says this IPO would be too risky given their guidance is in the $1. I'd wait for second quarter reporting before deciding to jump in. I'm going to read that again. I don't feel like I gave it the gusto it was supposed to get. All right. Jose says this IPO will be too risky given their guidance is in the $1, or excuse me, given the, and oh, dang, I'm messing this up, y'all. This IPO will be too risky given their guidance in the S1 and the S1. I would wait on second quarter reporting before deciding to jump in. All right. All right. So, all right, Felicia gives me some hearts. Appreciate you, sis. All right. A lot of the investing I'm doing is for us. When we get older, she won't have to bother anyone for anything. I feel you. And I believe you had the best intentions, right? Now, I know I'm not supposed to talk about this man, but I'm going to talk about him. So Bill Cosby had an episode of The Cosby Show when Vanessa brought, what was her husband's name? Vanessa brought her husband. He was in the Navy. And he looked good. And he had the great resume. And she says, do you know what he just did? What she just did? She served me steak on a trash can lid. Presentation means a lot. And that's what Dr. Cosby was trying to say, right? You're going to bring this great man. He's an officer in the Navy. He's responsible. He has a daughter, and he's marrying my daughter. He's got all the proper intentions. But you just kind of sprung this man on me. And me as her father, her steward, don't like this presentation. You're presenting it on a trash can lid. And so my analogy is when you hide something from somebody and you're doing it in secrecy, and this is your life partner, the person you're walking through life with, you're kind of presenting it on a trash can lid. But I don't want to beat that horse to death. Brother, I value your time and thank you for the info. Absolutely. I value you always showing up, Thunder. I value everybody for always showing up. Always appreciate it. But we've been here for a minute, y'all. We've been here for a minute. So listen, we've talked about inflation. We've talked about Elon Musk and his potential or alleged manipulation of the market. We've talked about Elon Musk's new tax bill, right? And how everybody can look at their employee stock options and see what you have to think about when it's time to cash those out, because there's a tax bill for everything. Render unto Caesar what Caesar is due. That's how Uncle Sam feels. Now, some would say he's a little bit too aggressive, but it's still Caesar, right? So we talked about all those things, and now I need to get my vittles like y'all know I always say I do. So as always, I appreciate you all here, right? But listen, make your own script. Follow your own path. The system is designed for all of us to be average and broke and slaves to debt. We're all greater than that. But in order to be greater than that, you have to recognize that. And in order to recognize that, you have to be willing to rebel. Rebel from the program. Rebel from their thoughts. Rebel from their ideas. And be willing to form your own ideas. All right? So thank you all for watching the Finance Rebel Show. We'll be back next week, 8 p.m., as always, talking about money topics so we can help increase the financial IQ in our community. Thanks, everybody. Have a great night.